Let's welcome our market master, Vibhav Kapoor. Good morning, Vibhav. Thank you very much for joining us. Well, we saw a bit of dithering yesterday by the markets, but today back again, and a fairly robust set of stocks and a robust manner of rise. The advanced declines is 2 stocks in the green for 1 stock in the red. Do you think this market is still showing no signs of correction at all? Paces to go, 8,200 quite easy in the September series?
Yeah, well, the market is in a pretty good momentum phase right now, and therefore you don't really know when that weighted correction will come. It's difficult to time that. But having said that, you just mentioned that today's advanced decline ratio is good. But the actual fact over the past few weeks actually has been that the broader market has not moved in line with the index at all. And after that first phase of rise in almost all stocks which happened in April, May, June, the larger market has lagged far behind the index. Now that is something which is a little bit of concern at the back of one's mind, although given the rosy predictions and the fact that the economy could recover, is recovering, at some stage maybe the broader market will catch up. But there are certain issues there. For example, high interest rates are still continuing. So, there's a little bit of a dichotomy in the index and the broader market.
When will the markets begin to worry about a valuation concern? Although we get carried away by numbers like a 5.7% GDP, if you look at the actual industrial output, the index is exactly where it was about 30 months ago in 2012. Is the market running ahead, and will valuations sometime come to haunt?
Yeah, I think that's a good point. I think, again, you need to divide the market into index and non-index, and maybe even sectorial-wise there are differences. If you look at the index, I don't think it's really overvalued too much at this point of time, because the market consensus is for about 580 to 600 EPS on the Nifty for FY16. So if you take 15 PE, you could be even at 9,000 levels by March 2015, a 12-month forward. So that's not a very expensive valuation, provided the economy continues to do reasonably well. But on individual stock basis at times, and particularly in certain sectors, like for example capital goods, there has been a very fast run, and the market would have run ahead, ahead of the fundamentals. So a lot is going to depend on how these hopes really pan out, for the economy to improve. And as you said, 5.7% last quarter, but that might be difficult to sustain going forward.
Okay. Vibhav, hi, good morning. Sonia here. We just heard from L&T on how, order wins are picking up, and especially in sectors like power, which were so slow up until now. Would you continue to back some of these names like L&T despite the 50% run-up that we've seen already this year?
Yeah, generally, as everybody, we are also bullish on the economy going forward, hopeful that, reforms will happen and things will begin to move on the ground much faster. And if that happens, then obviously, stocks like L&T obviously become good buy and holds. Maybe they run ahead of themselves for a short while, but then fundamentals catch up, and that's how the way the market goes. And for a medium-term investor, there's still a lot of money to be made. So I think the issue really is all these hopes which almost everybody is carrying, and I can't see a single analyst who's negative or a single fund manager who's negative on the market, and there's no reason to be also. But these hopes have to actually turn themselves into reality at some point of time. And I think, as Lata rightly mentioned, when is that time? So I think the market will probably continue to hope till maybe the 4th quarter of this year. And if then it finds that things are not turning out the way it expected, then you might see some disappointment happening.
Okay, well, let me come to one sector-specific question which was just haunting me. If you looked at the market's performance year to date, of course, the Nifty, the indexes and the mid-cap indexes have superlative performances. But I was just noticing a lot of the NBFCs have not done too well. MMFSL, L&T Finance Holdings, actually in the red on a year-to-date basis. Is that a pocket of undiscovered value now that you're beginning to see the CV cycle turn as well? Perhaps, and I don't know if you'll agree with it, wholesale rates could be softening.
Yeah, I mean, in a market like this, you need to be on the lookout for sectors which have not performed yet and where there could be a turnaround. And NBFCs or financial services generally could be one such place. For that matter, even PSU banks have not done all that well. Yeah, I know they've gone up on a YOY basis, but in the last run-up, they've actually done nothing and are still not very expensive if the bank's performance were to improve. So I think you need to take a call on how far the economy is going to improve and how quickly. And that could then have a beneficial impact on sectors like public sector banks and NBFCs. As far as rates are concerned, I think there is still probably some time for rates to come down, and that is one reason probably why the broader market is still not moving as much as the indexes. And in fact, if you really see the last movement of the index, maybe for the last couple of months, has been more led by pharma and IT rather than by other sectors, which is quite surprising given the fact that everybody is so hopeful of the economy.
Vibhav, obviously you can't give the valuations argument when there is a wall of liquidity or a tidal wave of liquidity that keeps coming in. Do you think that continues, or is there anything that can mar, or is there that the positive point that we are the cleanest shirt in an otherwise dirty laundry?
Yeah, I think that's an actual fact that the global situation is very, very conducive for equities as a class right now. You have the US, you have low interest rates everywhere. You have quantitative easing. Yesterday, you had the European Central Bank further lowering interest rates and doing some form of indirect quantitative easing. So it's a very, very conducive situation for equities. And India is, of course, doing very well, but there are lots of other markets which are doing pretty well also. I don't see that situation changing in a big way, although, if the US economy starts to grow much faster, and yesterday's economic data there was really very, very strong, and you have interest rates increasing much faster than the market anticipates, then maybe you will have some hiccups. But I don't see that happening quickly. In fact, even if the US were to start increasing interest rates next year and then say go up to 1%, 1.5%, I don't think that will impact money flows to emerging economies immediately. So I'd say 2015 calendar year could still be very good. Maybe in 2016 you could see some faltering happening.
Okay, we have a query that's posted on our money control message board, Vibhav. So I'm just going to toss that to you. Anand has written to us from Chennai, and he wants to know if it's a good idea to buy auto stocks now, especially a stock like TVS Motor. What's the call considering the frenetic run that these stocks have already seen?
Well, yeah, I'm not going to answer about a specific stock, but the sector still looks pretty good. If there is a cyclical recovery, and that's, I think, quite on the cards, then the auto sector generally does very well. A lot of these stocks have run ahead of themselves, but I think if you hold for a couple of years, I think they should still give very decent returns.
Okay. Since it is Teachers' Day today, I'm going to toss this question to you, Vibhav. What is the one maxim or one learning that you'd want to give our viewers on Teachers' Day, something that they could benefit from in the next leg of this up move?
I think, if you really look back, you really think that, why hadn't you bought stocks when the index was at 5,000 or 4,500 or whatnot? So it really teaches you that, long-term investing is really what pays off in the markets. It's difficult to time the markets, and particularly when sentiments are very bad, you have to be a little contrarian. And similarly, when sentiments are very good, at some point of time, you again need to be contrarian. So never be very fearful and never be very greedy.
Okay, that's a worthwhile lesson, Vibhav, on Teachers' Day. Thank you very much, and I must tell you that all of us have learnt a lot from teachers like you about the markets and about a whole lot of things. Thank you very much.
Thank you so much. Thank you.